is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So it's starting to go with the market going down. I made some additions, dividend stocks. The things aren't, I don't know what's going to go on with the yieldmax ETFs. I really like Curve, and I've been begging for the Netflix, the Curve Yield one, to get on here. Hopefully by the end of this week, it'll be on here. And then in 2 weeks, I'll be starting to buy things. I actually threw 200 into YMAX and the YieldMax ETFs because this is going to be a serious push. And if the M1 finance allows this, where you can have certain pies, invest in other pies, invest in other pies, I mean, what happens if I can use my high yield ETFs and high yield dividend stocks to buy dividend growth stocks? So that's one idea that I have doing, going from there. Because yes, I fully believe that you should have a hybrid of dividend growth stocks, high yield dividend stocks. SCHD is a great dividend ETF dividend grower. Only negatives, there's an expense ratio, which kind of is a pain in the butt. I mean, I know people that have over 2,000 shares of SCHD. I mean, I have over 2,000 shares of SCHG. Could SCHD be added in this pie in the future? Maybe. I mean, I haven't ruled it out because I need to focus on dividend growth. I need to focus on some high yielders. I can't really completely rely on the yield max or curve or FEPI and those guys. They're great. Don't get me wrong. There's a high expense ratio. I don't know what's going to go on with the round hill ETFs yet. These weekly ones, are they good or are they not good? Is LFGY good? I don't know. I'll probably post a video on that and evaluate some of those options income ETFs, because it's getting crazy and the market's getting crazy. But these 3 dividend stocks I added, and I did a collaboration with Tom Savings Captain, and they were too attractive to say no to. Yes, I have a ton of holdings. I totally understand that. That's going to stop. It has to stop because I need to start loading up on these. I need to start getting a very powerful dividend portfolio with shares, because if I have so many holdings, I need to get shares in these holdings. If I have 2 shares of Visa, what's that going to do? How about 100 shares of Visa? Now we're talking. How about 100 shares of Starbucks? Now we're talking. So, there has to be a distribution or funding or firepower to fund them. And I'm going to start funding these ones before I throw them in my major pie, which will eventually, hopefully, the developers create this new change. Don't quote me on that, but if they do, my certain pies can invest directly into dividend growth stocks. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. Smash that like button. Let's check out these 3 dividend stocks right now. The first one I want to go over is Nexstar Media Group, nxst. So the trailing 12 months, I just want to mention that it has increased, which is good. I'll show you the most recent trends. And they're a big media group in the United States. They're sitting at 150.59. They have not done too hot against the S&P. And for a high yield dividend investor like myself, the dividend yield is 4.94%, a PE ratio of 8.71. The average volume is 284.42K. Market cap is 4.67 billion US dollars. Its year range is 147.13 to 191.86. Day range is 147.13 to 152.93. Previous close is 149.56. Let me show you the most recent trends, which are really attractive as well. This is what really attracted me to them, is their revenue. Okay, so in September 2024, 1.37 billion. That was up 20.67%. Now, the operating expense was a little bit down at 6.01%. I'm not too concerned about that. Net income was up 648%. That was at 187.00 million. The net profit margin 13.69. That was up 519.46%. Earnings per share 4.04. That was up 412.39%. EBITDA was up 104.89%. That was beautiful. Now let me show you the dividend history. I'll start in 2013, it was 12 cents. 2014, it jumped to 15 cents. 2015, it jumped to 19 cents. 2016, it jumped to 24 cents. 2017, 30 cents. 2018, 38 cents. 2019, 45 cents. 2020, 56 cents. 2021, 70 cents. 2022, 90 cents. 2023, 135. 2024, 169. And then it jumped to 186. So the payout ratio is beautiful, 39%. Number of dividend increases last 5 years is 5. Dividend growth in 5 years, 31.76%. So if you bought one share, you made $7.44 of the 4.97% dividend yield. I like it. I'm going to be buying it. Let's jump to the next dividend stock. Next one is Dollar General Corp. They've been getting hit hard. They're actually doing pretty well against the S&P 500. Sitting at 79.03, a dividend yield at 2.99%. I would even consider that high yield because it's might even drop a little bit more and be more attractive. The PE ratio is 13.02. The average volume is 3.42 million. The market cap is 17.38 billion US dollars. Its year range is 66.43 168.07. Day range is 76.28 79.88. Previous close is 76.69. What do I like about it? Why did I buy Dollar General Corp? I was against buying them before, but I'm happy now. Few things that are a little bit down are the net income, the net profit margin, earnings per share. Sure, the earnings per share was at 7.55. It was down 29.31%. Revenue has been up and the operating expense has been up. So at least the revenue is helping them out. They're such a deal right now. They have so many stores, it is like ridiculous too. So that's one thing that they have going for them. This one's a little bit on the riskier side. You see net profit margin down 32.76% from the year before that. EBITDA was at 18.58% in the negative. So I'm going to take a risk on them. I mean, they're going up. Revenue, net income was slightly down compared to the previous year in 2024, but looks like an attractive buy for me right now. So I'm going to take the risk right now with Dollar General and see if they improve. If they don't, I'll just dump them. So that's one thing I like about them, and even more is their dividend history. I'm going to start 2015, 22 cents, 2016, 25 cents, 2017, 26 cents, 2018, 29 cents, 2020, 32 cents, 36 cents, 2021, 42 cents, 2022, 55 cents, 2023, 59 cents. And their payout ratio is 39%. Their dividend increase in the last 5 years is 4. Dividend growth in 5 years is 15.14%. If you bought one share, you made 236 with a 3.08% dividend yield. So that is quite attractive for me. A low payout ratio, dividend growth, and maybe they'll start getting things together. Don't quote me on that. That's why I capitalized on them. And I'm going to show you the final dividend stock. UPS is my next one, sitting at 116.16. Dividend yield is 5.65%. The PE ratio is 17.20. The average volume is 7.01 million. The market cap is 99.13 billion US dollars. Year range is 109.40 to 158.95. Day range is 115.86 to 118.08. Previous close is 116.33. Look at them. They're dropping against the S&P 500. That attracts me. Is a dividend growth investor and a high yield dividend investor. So I'm kind of a hybrid when it comes to dividend growth and high yield. This is right up my alley. This is beautiful. This is something that I'm going to capitalize on and buy. And I'm going to show you a few trends. Revenue was at 25.30 billion. It was up 1.5%. Operating expenses 3.15 billion. That was up 3.69%. Net income 1.72 billion. That was up 7.23%. Net profit margin 6.80. That was up 5.59%. Earnings per share was 2.75. That was up 11.34%. So that is attractive. EBITDA was down 4.57%. That was at 3.19 billion. I'm not too worried. Let me show you the dividend history. Start in 2018, it was 91 cents. 2019, 96 cents. 2020, 101. 2021, 102. 2022, 152. 2023, 162. 2024, 163. 2025, 164. Watch out for the payout ratio. Be aware of that. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years, 14.64%. You bought 1 share, you made $6.56 with a 5.64% dividend yield. I'm going to jump to one more wild card. And be aware this one is starting to look attractive. Curing Dr. Pepper, KDP is a symbol, sitting at 34.12. The dividend yield is 2.70%. The PE ratio 20.65. The average volume 9.12 million. The market cap is 46.28 billion US dollars. Year range is 28.62 to 38.28. Day range is 33.86 to 34.42. Previous close is 34.04. So, what makes them attractive? Look at their annual earnings report in 2023. We're seeing a upswing or a trend that's going up. Now this is 2023. The revenue was up 5.39%. It was 14.81 billion. Operating expense 4.86 billion. It was up 9.22%. Net income was 2.18 billion US dollars. That was at 51.88. Net profit margin was 14.72. It was up 44.03%. Earnings per share 179 or 1.79, excuse me. It was up 6.55%. EBITDA was up 9.99%. That was at 3.94 billion. Let's jump to the dividend history. In 2019, it was stuck at 15 cents. 2020, and then 2021, it hit 19 cents. And then 2022, it hit 20 cents. And then in 2023, 2024, it hit 23 cents. So you have a little bit of a high payout ratio of 49%. Dividend increases in the last 5 years is 4. Dividend growth in 5 years, 10%. If you bought 1 share, you made 92 cents with a 2.70% dividend yield. So I just want you to be aware of that. Be aware that there is a wild card one out there. So I am not buying KDP, but just be aware that that one's starting to make a comeback. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. I will have a video for you tomorrow. May squeeze one in tonight. So take care and have a good one. Make sure you subscribe to my YouTube channel so you don't miss free content. And make sure you hit that notification bell. Take care and have a good one. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So be aware and do due diligence. Go see a financial advisor for financial advice and a tax advisor for tax advice. Don't forget tax season's coming up, by the way. You can lose money. So be aware and do your due diligence. You don't have to buy things because I buy things. I'm just showing you my passive income journey. To do your own research, you should do your own due diligence. But hey, if I'm losing money, maybe that might be a good indicator to not do certain things. But things are looking pretty good with my portfolio, and everything's transparent, and I'm showing you what I'm doing, why I'm doing it, and providing my rationales. Take care and have a good one.